Continuing with our coverage of TCS's earnings, their Q2 earnings report has been fairly impressive, in line with expectations, and their strongest quarter seasonally is where they've managed to deliver on expected lines. Apurva Prasad also joins in with his take. Gentlemen, I need to very quickly understand from you what should one do with the stock. Where does it stand when you compare the growth versus valuation story for TCS, because it was down 3% today after a strong run over the last 1 month. Apurva, you go first. What would be your take after this earnings report on what to do with the stock tomorrow morning?
Sure. So we have a positive view on this. I think we'll pretty much maintain that. I'm pretty impressed with the performance, especially on the digital side of the business. So while the numbers are nearly in line with my estimates, but I think the digital performance very clearly stands out. The fact that also they were able to execute at such low attrition levels despite the differing trends within the industry, I think that's commendable. So I think we'll maintain our positive stance. In terms of the industry pecking order within the Tier 1 IT, this would continue to be our preferred pick, and in terms of growth also, this should be leading up there.
Okay, so buy on TCS so for the benefit of our viewers, 4 analysts who are one of the most influential analysts on the street when it comes to analyzing earnings, and all 4 of them have been impressed by TCS's Q2 earnings report, are saying that they maintain a buy. One can look at buying the stock in the current fall because the numbers reflect the fact that growth is intact, and within the internals of those earnings, look at what they've done with building their digital business, building their contribution coming in from digital revenues. It's up to 28%, which is a 60% growth year on year. Very impressive, and it just reflects that the management is pretty much working as per plan and as per the strategy that they've indicated and communicated to the market, and that goes a long way in convincing investors that they pretty much have their targets in place, targets set, and they know where they're headed. And I think that calls for a bit of a premium, so to speak, for the stock to enjoy vis-a-vis peers within the space. And, talking about peers, Apurva, my next question is, how do you now, having seen TCS's numbers where they've matched street expectations, it's looked like a strong quarter for them, which is typically the strongest quarter for the financial year. How does that now set stage for what the others might report? Because, they've had very different business models. TCS has been far more resilient than in Infosys or in HCL Tech. So what do you expect from them?
Sure. So like we called out earlier, we expect divergent trends within the sectors, at least the Tier 1 IT, in terms of results. So for Infosys, we expect about 2.5% constant currency. So it should be probably lower than TCS. Having said that, there seems to be business momentum which is expected to come back into Infosys. Tech Mahindra and HCL Tech will be a different story. So there is an inorganic component coming into play for an HCL Tech this time around. And Wipro should probably be the most sluggish this quarter. So that's how it's stacked up for this quarter.
Right. Pankaj, and give us more details on the earnings. I want to talk a bit more about the traction in the digital segment. Apurva, the management has guided that they definitely do want to build that business. Do you think TCS would be far more compelling a story when it comes to digital traction than some of the other IT names from India?
Oh yes, most certainly. In fact, our recent channel check is also suggesting strong credentials of TCS in the digital side of the business. I think the scale also speaks volumes at which they operate currently, and even the recent quarter performance is sort of corroborating that view. So I think they're pretty well placed in terms of the transition to digital that seems to be happening, and I would probably certainly pick TCS to be one company which will benefit from significantly from this transition which is underway. So there's been a lot of organizational rejig that has happened over the past couple of years in order to align the business towards the newer digital services, and that seems to be paying off pretty well. And I think that's really what's getting reflected. And I think the real challenge or the real opportunity could be if these newer initiatives can be margin accretive. So if you can move into an environment where digital can potentially be higher margin business. So I think that seems to be the real opportunity for this. In terms of an addressable opportunity, that's massive, and I think a scale player in digital will tend to benefit. So I think TCS looks to be very well positioned for the same.
Yes, it does. I just have a follow-up, Apurva, on the 4 deals they've won in the $100 million plus category. Impressive?
Yes, absolutely. In fact, if you see, so I believe the count would probably be about 44 accounts in 100 million category. The wins even the previous quarter was at a multi-quarter high, so I think that seems to be accelerating, and that's a very good sign considering the fact that you have overall deal sizes reducing structurally as a trend. So in that scenario, they're able to upscale some of their accounts as well as win new scope deals. So I think that's an encouraging trend. So that's a very clear metric. And if you see, TCS was lagging this about a year and a half back. Their large account metrics had slipped. So they've come back pretty strongly if you see in the last 2 to 3 quarters. So I think that trend continues to look very healthy.
Right. Same question to you as well, Pankaj. Despite, headwinds in what they're saying about maybe U.S. growth slowing down, Pankaj, Harith, Apurva and Mayuresh, thanks very much all 4 of you for joining us and making sense of TCS's earnings for the benefit of our viewers. That's a consensus call coming in from the most influential analysts tracking the IT sector. They're saying TCS's numbers look good, and the stock fall is really an opportunity to look at buying the counter at current levels or at lower levels if the opportunity presents itself, which it has. Over the last 3 months, the stock has pretty much done nothing, and over the last 1 month also it's been down 3%. So good numbers, and maybe the numbers will act as a bit of a support to the stock's performance in tomorrow's session, even if the markets see pressure, selling pressure, follow up to what happened in today's session. Remains to be seen, of course. The market has a mind of its own, so one can't call it right all the time. But TCS's earnings definitely is something that the markets will closely monitor when the stock begins trade tomorrow morning. Thanks very much for watching our coverage of TCS's Q2 earnings. We'll take a short break. In a bit, I think the TCS management will join us with more details about the internals of those numbers. So stay tuned for that.